Obviously, we know about the run-up going into the print, and given the action today, investors seem to have sniffed out a lot of what we actually got in the report. What'd you think?
Yeah, I mean, wrinkles is an interesting term. Let's be fair. It's had a strong move year to date, and the wrinkle is really transitory. The operating margin weakness for Q1 is really a function of FX more than anything else. As you get the benefit of the price increase rolling through the second half and FX headwinds abate, you should see some natural margin expansion and revenue reacceleration. So we like what we saw, and we'd be buying here.
Matthew, that is certainly the bull case. We've been having discussions about how we judge from this point the efficacy of the price hike. What will churn be, given since that's not a metric we're allowed to see? How are we going to judge this in the months to come?
Yeah, look, I think, I think this was a really strong print, right? They beat the sub number by about 2 million in the fourth quarter. The guide for the first quarter is about 500,000 ahead. We will see that price hike roll through late in the first quarter. It'll really impact the second quarter in a more pronounced way, and then we'll be at a full run rate in the back half of the year. But you couple that with, again, starting to, the comparisons on the currency front starting to get a lot easier, and we're going to see, there's been a lot of nitpicking around, subs have been a lot better, revenue's only been in line, EBIT, has only been in line. But as we start to look forward and get those price hikes rolling through and starting to, again, hit those currency comparisons getting a lot easier in the back half of the year, we're going to see that revenue and profit margin perk up as well here. So obviously the guidance for 1Q on domestic does take into account some uptick in churn, as you'd expect when you flow through a price increase. But as we saw in 2016, as we saw in 2017, we expect these price hikes to be revenue accretive, and we expect to see revenue growth in the domestic business in 2019.
Justin, one of the things that jumps out at me over this latest span of time is what happened with you, not you personally, but the show on Netflix. It was on Lifetime for 10 weeks. Nobody really paid attention, got on Netflix and kind of blew up. And this runs counter to a lot of what we've been hearing about discoverability on Netflix, and to me, potentially raises a red flag for Netflix's competitors. I don't hear a lot of the other players jumping into streaming, leading with data, with separate profiles for different family members. Are they going to be able to make things blow up and help people discover content that they didn't know that they wanted to watch already?
Yeah, excellent point. And if you're at Lifetime and you turned down renewing you feel really bad after last night's print. So part of our thesis with Netflix is that it has a global distribution advantage. In the next 2 years, Netflix will be approaching 200 million subscribers globally. So Netflix is about discoverability. You go to Netflix, you're looking for content. By just leveraging its data sciences advantages, it can provide more relevant content to users, and we think that helps create a virtuous cycle. More engagement, more time spent on the platform, and ultimately better pricing and better margins over the long term.
Matthew, I want to dig into these subscriber numbers a little bit more, because the domestic ads were shy of expectations. You had the international numbers, which came in better than expected. One of the key things that keeps getting pulled out is the fact that the rate of subscriber ads here in the U.S., that rate of growth is slowing down. From a financial standpoint, are all subscribers created equal for Netflix?
Well, I mean, look, slowing down is you're approaching 60 million subscribers in a market that has just north of 100 million broadband households. The rate of growth is still high single digit, and so we still expect a lot of runway for growth here in the domestic market, whether that's a direct sign up to Netflix or whether it's through some of their various distribution partnerships, through bundles with the likes of a T-Mobile or with a Comcast. So we expect a long runway for growth here in the domestic, but there's no question their penetration level here versus the rest of the world is clearly much higher.
Justin, how closely are you watching debt right now, especially given the fact that we've had rising rates over the past year? Netflix has a lot of it. How exposed are they if those rates go higher?
Yeah, it's a fair question. I would say Netflix has not had that much difficulty tapping the capital markets so far for debt. If rates shoot up materially, it's certainly a risk. But if you look at the company's commentary, that free cash flow burn flattens out this year and improves every year after. It looks like over the coming years, they should be able to internally finance more and more of that content. So it's been a big risk in the past. If markets worsen, it could be a risk, but going forward, starts to lessen.
Matthew, I want to get your take on Netflix's competitive advantage as more rivals stream into the space, so to speak. To what degree are you seeing those rivals understand the role of data in the platforms that they're trying to roll out? And how much is that going to play, personalization, targeting on their platforms into your assessment of how well they're doing?
Yeah, look, I think they're playing a lot of catch up here. That's exactly where Netflix has really the biggest lead there. And so a lot of these new services that are coming to market really need to build up that muscle, and it's going to take some time to get there for sure. But as we get more competitive over the top offerings, Disney's a great example coming later this year. We think it's also going to spark a lot more cable disconnects, right? So it's going to grow the entire OTT pie. We don't expect it to spark any churn from Netflix vantage point, but it is going to grow the overall pie. But again, I think a lot of these new competitors, that's really where they lag Netflix, and they've got a lot of work to do to build up that muscle to compete there with Netflix.